Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY.
Welcome back to Liberty and Finance. We have a popular returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us for this weekly market update, Tuesday, March 1st, 2022. Andy, as always, thanks for coming back on.
May we live in interesting times, Dunnigan. These are certainly about as interesting as I've ever seen in my whole career. It's good to be back, and thanks for having me again.
I'm afraid that many of us are longing for less interesting times and remembering them fondly. So we're hoping to be pass through this set of challenges and trials. We've had volatility and geopolitical strife in Canada, in Russia, and Ukraine, and elsewhere. Encroachments on people's liberties all around the world. People being very concerned about government overreach and potential risks to their family's financial future. You just talked to us recently about some of the hijinks that occur on the COMEX market. We certainly saw a lot of action in the last week with silver prices, in particular on the COMEX. Can you talk to us about what we know about what actually happened, about a run-up in prices and a sudden smackdown, and the dynamics surrounding that?
Yeah, round numbers and moving averages are vehemently defended by the cartel. And I've often said the only way you can successfully manipulate a market is to push it in the direction that it is going. It is wasted, expended energy in trying to hold back a global tsunami of demand. And, when the cartel started to mess with gold and silver, we can go back years and years and years ago, all the way back to, Clinton and his strong dollar policy. Way back, we see an affinity for U.S.-based assets, stocks and bonds and real estate, and a complete lack of interest whatsoever, even an acknowledgement of gold and silver as an asset class globally. It was very easy to push the price around, to affect sentiment. It was very easy to suppress the price of gold, and with the proceeds buy treasuries, which would enable interest rates to fall further, which would push the price of gold lower and lower. And it was a repetitive process where the central banks would lease their gold to the commercial banks, who would sell it short to the market, take the proceeds, buy treasuries, and continue this process, which kept an illusion of strength in the dollar, which kept interest rates low. That illusion was fostered by stepping on the canary in the gold mine, the price of gold and silver. And it's not that way anymore. I think it's very obvious that there is a great deal of concern globally, not just here in North America, about what's happening with inflation, with inflated asset prices, with geopolitical, political, moral, social, you name it. There's so many things that are troubling people that I think to assume that the road to retirement is only paved with U.S. stocks and bonds and mutual funds is very naive. Not as naive as it once was, but much so, more so now. And so these round numbers for the cartel that is clinging to the last bit of life and being able to hold the prices down, I think is something that needs to really be understood. We look at the 200-day moving average as an example. When we look at silver, we saw it at the onset of the war between Ukraine and Russia. Gold and silver in particular, we'll focus on silver here, blew through its 50-day and the tougher 200-day moving average, which is a longer trend line that once 50 and 200-day moving averages with momentum, as Michael Oliver would like to talk about, once those levels are breached, it alerts all of the technical analysts, all of the funds that use and employ technical analysis, that a new trend line has been established, that we have blown through the resistance levels that have been in place for a long time. And not only that, with great momentum. And in silver, it was $24.40 is the 200-day moving average. As we blew through that, everyone feeling good that the price had closed above $25, we see Bank of America sell 1 billion with a B, 1 billion ounces of derivative paper silver short onto the marketplace to drive the price down. Now, this reeks of desperation. These are the goofballs that are short 800 million ounces of silver. And on a day like today, where silver's up 80 cents, do the math yourself. That's $640 million that they have lost today alone with silver moving up. This is what put Bear Stearns out of business. And if those of you that have listened to the interview between Bart Chilton and Chris Marcus, where he admitted all of this stuff, where Bear Stearns went bankrupt because of silver exploding, the JP Morgan inherited the deal, on and on and on, and then he died a week later after telling that story. This is what put a large commercial bank like Bear Stearns out of business. Now, is it going to wreak the same havoc on a company like Bank of America? Not sure. But I think if I were a board member of Bank of America, I'd say, what the heck are you guys thinking, being short 800 million ounces of silver in this environment? And a good deal of gold, too, 30 or 40 million ounces is what I was told. This is insanity. And so when you see the lengths to which that they are trying to keep it below moving averages and how futile the endeavor is, lasts a day or two, and bang, here we are, back up above $25 today. And yes, there's geopolitical problems, but you could argue, I can, that this is long overdue on so many levels. And I think it's really important to understand that not only did they short 1 billion ounces, which is 200 million ounces more than is mined in a year. If you look at the numbers, one day before the March delivery, they were as many as 15,000, I believe, COMEX contracts short of being able to deliver. In other words, there was somewhere in the neighborhood of 30,000 COMEX contracts that were open interest that could stand for delivery. Backing it was somewhere in the neighborhood of 15 or 16,000 contracts worth of silver in the registered category. This close to a silver squeeze, this close to a force majeure. The games that are being played on COMEX right now, Dunnigan, have never been like this. And the banks that have, with a great deal of hubris and stupidity, I guess, are setting themselves up for a religious experience. If we see metal really start to move, and once you get through these resistance levels, there's really not a lot of resistance between here and $30. And if you saw something like that, where a $5 move or a $4 or $5 move from where we are right now times 800 million ounces, do the math very quickly. This puts a bank like Bank of America in big trouble. And so you can understand why they would go to such great lengths to hold the price down. But what I can't understand is why the heck would they have got themselves in this position to begin with. One of these days, these stupid decisions are going to come back to haunt them just like it did Bear Stearns. And if it weren't for the grand effort of holding it down, you'd see silver well above $30 today. You'd see gold well above $2,000. It's trying today, but we'd be there a long time ago if it weren't for this. And this is just another example of the great lengths that they're going to try to keep the price in check for whatever that means.
You mentioned along the way there some of the geopolitical strife that can be only adding concern to people who are looking for safety and security in their portfolios. One of the tactics that's being proposed by the government, by the U.S. government, is as a sanction against Russia. And oh my gosh, you get a different perspective on this when you look at Ron Paul's assessment of the build-up to this and how long it's been going on and how long he's been recommending against escalating exactly what's been escalated in the last few months here. But one of the sanctions that's been proposed is removing access to the SWIFT system, if you could, for Russia as a punishment. Can you talk to us about, just make sure people are clear what that means, what it is, but also what some of the unintended consequences are that you've been thinking about that?
Yeah, so the SWIFT is like a telegram service, similar to an email, I guess you could say, to make it really simplistic. But it's related to the execution of financial services, and it allows money to move back and forth, communication, if you will, the oxygen that allows free-flowing money between banks. And if you cut that off, you could argue cut off the oxygen. You make it impossible for these banks to transact interbank. And the SWIFT system is entangled throughout the whole globe, and that's because of the petrodollar status, where nearly 100% of all oil transactions are still, at this point anyway, settled in the U.S. dollar. And it's I think could be very easily waged collectively by Russia and China. If you kick Russia out of the SWIFT system, you look at Russia and China, and they both have similar goals, and that is to not be bossed around by the West, so to speak. And so, I've talked for a while at length about the BRICS nations, about the Belt Road Initiative, which is connecting 75% of human population, 45% of global GDP, the largest infrastructure in human history. And when you see the relationship between Russia and China, as an example, the relationship where they are sidestepping the dollar in so many unilateral trade agreements, what we are forcing them to do, I believe, is to move quicker and to wage a war against the U.S. dollar. You could see them very, very quickly move to, like, the system that China has built, I believe is called CIPS, CIPS, which is the cross-border interbank system, payment system. This is a system that mirrors the SWIFT system that they built in conjunction with Russia several years ago. We are incentivizing China, Russia, and many other countries to usurp the dollar, to find a new system. And when you look at the U.S., who's not going to stop printing money anytime soon to finance their war machine, to finance all of the things that we've been doing to keep the ball up in the air, you're going to see more dollars created and less demand for dollars, because you're going to see less people using dollars. If indeed this is what we're doing, we're kicking them out of the SWIFT, they're going to find other avenues to transact business. And maybe this incentivizes the Chinese. So you see more dollars created and less demand for dollars. What does that do? You don't need to be an economist to know that that will drive down the value of the dollar if there's more of them in circulation and less demand. And so as that happens, that means that you need higher interest rates to compensate for the loss of value and purchasing power in the dollar. What does that do? It blows up the whole system. It's a reinforcing cycle. So whether they raise interest on their own or push a good portion of the world into moving away from the dollar and demand for the dollar, which in and of itself will create higher interest rates, we're in trouble. And I think this only expedites, the law of unintended consequences will only expedite ultimately that moment, that seminal moment where we have a real problem on our hands, where either we see a flood of U.S. dollars coming home, or in conjunction with interest rates spiking as the dollar precipitously loses value. We've talked about this same situation, trying to think like on a hypothesis, what would happen if Saudi Arabia started taking other currencies for oil. This is the exact same kind of moment. If you saw the BRICS nations move away from the SWIFT system to the CIPS system, start using the new digital yuan, and maybe China and Russia come out and say, you know what, we're going to back this new digital currency with gold, like that, it's over. And I don't want to, ride the fear train, but we are getting really close to these types of moves happening. Our hubris, our belief that everyone in the world wants to use the U.S. dollar and our system, I think, is ill-founded. Quite frankly, I think there are a lot of people, including, I just read the other day that even in Europe, they're talking about a new system that will reduce the reliance on the dollar hegemony, and that they want to do the exact same thing, have a system different than the SWIFT system. So, in fact, it was the German foreign minister who brought this up, and a new EU-based payment system. You're seeing the world grow tired of what the U.S. has done to the valuation of the dollar and the way that they are able to impose sanctions and cut you out of a system. This is what they threatened to do, for example, to the bank in France when they did business with Iran after the sanctions were imposed upon them. They said, either pay us $4 billion or you're out of the SWIFT system. There's a growing swell of people who do not like that. And when we start to push people in this direction, the law of unintended consequences take hold. And I am just simply saying that it draws much, much closer to the dollar losing its singular world reserve status by making overt moves like this.
As you've been describing these facts, these historical facts that have happened and even current events surrounding that, my mind has been just thinking about bringing it down from the grand geopolitical scale down to the individual scale. If you think about the principles involved, this is centralized power control over the ability to transact financially, that's then, once it's put in place, is used as a tool of control over sovereign nations, about their conduct, about their policies, about their involvement in wars or not, or whatever. And the world turning away from that and saying, we need a different alternative because we don't want to be under the U.S.'s thumb. Now, if you take that down to the personal level, people in our country who have a job, earn money, put it in the bank, pay their bills, think that that's their save for their retirement, this is their financial life, and we've been telling people, the more and more that we've gone to an all digital currency, and the more that we've got, people like Omarova being appointed comptroller of the currency, that sort of thing, this idea that be careful what you wish for, this efficiency and this centralization of control means you can be deplatformed, you can be denied access, and it's like, oh, you're a conspiracy theorist, you have a tinfoil hat on. It's like, this has been international policy for decades and decades and decades, and you don't think, and with what's just happened in Canada over the last 2 weeks, that it can't happen here? So any thoughts of yours on how that grand principle that you've just shown at the international level can also happen at the individual level as far as being digitally deplatformed from being able to transact?
Well, Lael Brainerd, who was voted in as the vice governor of the Fed, or the second in command at the Fed. And I thought she was going to take over for Powell, but they reappointed him. But they brought her in as number 2. She's a modern monetary theorist as well. She wants the abolishment of the commercial banks, a central bank digital currency where you can add or subtract funds into people's wallets based upon the monetary backdrop, where monetary policy is given directly from the Fed to the end user. And where things like social credit score come into play. People keep talking about that. I read an article the other day that said, if you don't think that what you're doing on social media comes into play, think again. In fact, what was said was that there are a lot of lending institutions that they have software that scours the social media platforms. And some people are not being given loans based upon their social media score. And if that isn't reason enough to tell your children to really think twice about what they put on social media moving forward, that stuff's out there forever. So look, it's not that far-fetched. I mean, we're entering that George Orwell type of dystopia where these kinds of things are real. And if you don't think we're getting that much closer to a central bank digital currency, I mean, I have a bridge to sell you. We were talking at length again about the group, the World Economic Forum and the IMF and the BIS and the 13 countries and the U.S. Treasury that met simulating a global cyber attack, the same group that met and simulated a pandemic in 2019. What do you keep hearing over and over and over and over again lately? Cyber attack, cyber attack, cyber attack, cyber attack. It's coming to the banks. I mean, if that isn't going to be some sort of an incentive to push everyone away from the commercial banks to a much more secure Federal Reserve digital currency, I mean, it's coming. And I think that these types of things that seem so far-fetched out there that you almost hesitate to talk about, they're becoming more and more and more of a reality, not only in the rhetoric we hear and see, but also the people that are coming up the ranks at the Federal Reserve. We are doing full modern monetary theory right now. When you see the article that came out of the Levy Economic Institute, when they challenged the Fed all the way to the Supreme Court, and we were told that $29 trillion was spent bailing out the banks, not the $5 trillion that we were told. When you see the amount of money going into the repo market every night, when you see the amount of massive money creation and spending that we've had since the onset of the pandemic, this is modern monetary theory. There is no monetary restraint. I think that these things are becoming more and more and more a reality. And this is part of the reason why I think we've seen a groundswell of interest in metals because it's starting to seep into the psyche of the public. And I think inflation is probably the greatest concern that people have right now. And I don't think we've seen anything yet, to be honest with you. I think what we're seeing right now in the Ukraine is going to give the Fed incentive to not tighten the way that they said they were going to. It'll give them maybe even reason to go back and loosen up monetary policy as oil and gas and heating fuels spike, as we see problems in the energy market. So, look, the bottom line is simply this, that I think the dollar is living on borrowed time, and these sanctions are only going to hasten the speed at which this happens, as they will kill demand from a large portion of the people that use dollars every day, because they will now be excluded from using the SWIFT system. They will abandon dollars, and they will abandon the SWIFT, and they will find an alternative route like the SIPS system that China and Russia have been working on for years, and it's coming. And when you ignore unintended consequences is when you get caught off guard. We have been talking about this stuff forever, to be prepared for whatever as we get what's coming down the road, I guess is what I'm trying to say. But you can surmise where it's coming from. But if you look closely enough, you can see something is coming. And I think this is one of those somethings that no one really saw coming. And if it plays out the way I think it will, it could have a profound effect negatively on both the U.S. dollar and the U.S. economy.
Along the way, we mentioned Canada and unexpected overreach that just happened there in the past 2 weeks. We've had a lot of calls from clients concerned about should they reassess the risk analysis that they did about storing metals in vaults, especially ones in Canada, but in any vaults. Your answer to people who are looking at that afresh, given the light of the recent activities by Trudeau in Canada?
We've delivered a lot of metal to Brinks Canada over the years, a lot. And I have a lot of my own there, too. And I think about this. I get it. I understand it. Rick Rule on your show is as eloquent as anyone ever talking about this, and talking about the sidestepping of due process and the rule of law, and it being a fascist type of movement. And, on one hand, I want to say that this was the act of a desperate government that was trying to allow things to flow between the two countries. The blocking of international trade was the incentive. But I get it. The draconian action, the fascist action, makes you wonder: is this the beginning? Are they going to continue to do things like this? Are my holdings at a depository in harm's way? Look, I haven't moved my stuff. I've been telling people I'm not overly concerned about it. I find it troubling that it happened, period. But I don't think we're the target of it. With that being said, I understand the logic of the question, and there have been people that have moved their metal out of Brinks Canada into our U.S. Brinks facilities. The ironic thing is that all the people that purchased in the U.S. to move to Brinks Canada did so out of concern that this would happen in the United States. Something like this would happen in the U.S. long before it would ever happen in Canada. My business, done again, was founded on Swiss investments. And in the 90s, we helped thousands of people find their way into Swiss annuities, Swiss bank accounts, and Swiss gold storage. Well, when FATCA came about, all of the Swiss banks and all of the Swiss depositories kicked Americans out. I guess the best laid plans have to be reevaluated from time to time. If I were being honest, I would say I'm not overly concerned at this point about Americans' metal being held on a contractual basis between you and Brinks being a multinational company, Fortune 100 company, the way I would be having cash in a bank account at the Royal Bank of Canada. Doesn't mean that these statements are not without merit. I would have thought if you would have told a Swiss citizen in 1990 that the Swiss would join the United Nations, that they would delink their constitution from gold, that they would kick foreigners out, and what they just did now, telling Russia that they will not allow them to harbor their money there the way that they have done for hundreds of years. Here again, best laid plans need to be reevaluated. In a world of imperfect choices, short of holding it yourself and burying it underground, I still like the U.S. and the Canadian depositories with Brinks. But if it bothers you, peace of mind and sleep at night is the most important thing to own. And we can assist you in moving it to a U.S. facility under the same terms. We can assist you in having it shipped home or liquidated or whatever you want. But at this point, until I see him do something like going after a personal property, the way that he did with bank accounts, I am less inclined to tell people to knee-jerk out of there. Quite frankly, I don't even think they're on the that this type of an account is on his radar whatsoever.
The environment you were talking about here is trying to anticipate into the future in a time of increased unrest and disruptions to shipping, trucking, distrust in government, distrust in financial institutions, stability of financial institutions, etc. In the anticipation of an environment like that, some people are asking how they might pre-stage their metals in anticipation of a future swap or a future buyback. If they're planning to do a silver for gold swap in the future, or if they're planning to buy a big piece of property and they want to make sure that when the time comes and they think they see a really good high price in silver or gold, that they can pull the trigger and get paid out by a bank wire within a week, that kind of thing. They're asking what options do they have for positioning themselves ahead of that and not being subject to the rush and the crush and the disruptions that may be present at that time.
Well, it depends what the rush and the crush and the distractions are at that time, or the disruptions rather are at that time. And here again, using 2020 as an example, I went to my one of my high school friend's wedding in December of 2020, not having any idea that I would come back to a whole new reality. Who knows? But if you want things to be immediately liquid, it would be in one of our Brinks facilities or in the Dakota Depository in North Dakota, so that we can immediately buy it back without having to go through sending the metal back through UPS or registered mail or driving it to one of our facilities. So the answer is yes, we could help, but we're not able to hold the metal for you without it being secured, segregated, allocated in your name, opening up a storage account. That's too messy. That's too dirty. It goes against everything that I believe in precious metals. You look at a company like Bullion Direct out of Austin, Texas. $35 million worth of metal that they were holding for people was stolen because it wasn't properly held in a vault, in a secured vault in their name, segregated. And I think it's important that if you're going to, if you're going to want to get ahead of this and have stuff ready to liquidate, if that were something that was important, like, for example, I know that I need to sell 100 ounces of gold 4 months from now, and I'm going to need it no matter what, because that's what I'm going to use to buy my house. Well, you could open up a storage account for 4 months and send the metal directly to the facility. We would assist you in that. And when that day comes, we can lock it in, buy it back, and send a wire within 24, 48 hours. The issue that I think the listener is talking about is having to send it back in this period of time where things could be crazy. Maybe there's disruptions in FedEx and UPS and registered mail or whatnot. So, these are all realities, I guess. But that would be the best way to do it, either to drive it directly to the facility or to have it stored for you with the intention of liquidating it at some point down the road. But just sending it to us and having us hold it is really bad practice, and not something I would ever endorse as a business owner.
For people who are either wanting to get started getting their first physical metal in their possession or to add to their existing acquisitions, what weekly special do you have to offer this week that we can offer people?
So following a similar theme to what we've been doing lately, I think the real value has been found in silver bars. I think the premiums on coins continue to ratchet higher. And while I'm a fan of silver coins, I think those looking for value right now without diminishing utility or flexibility will be found in small silver bars. And with that being said, we're going to offer two. We have some really nice Italian 5-ounce bars that come with certificates of authenticity, where the number on the certificate matches the number stamped on the bar. Those will be $3.29 an ounce over the price of silver. And we have Australian ABC kilo silver bars, 32.15 ounces, also serialized with certificates of authenticity. They will fit in the palm of your hand. Both bars are small enough to give great utility. Those will be $2.69 an ounce over the price of silver. So whether you're talking the 5-ounce or the kilo, you're getting value in price, which is going to be a minimum of a buck plus, maybe even $1.50 on the kilo, and right around $1 on the 5-ounce bar, under per ounce the value of 1-ounce coins. And at the same time, a 5-ounce bar or a 32.15-ounce bar are not too big to where you are diminishing your utility or your flexibility or your liquidity. I'm a big fan of both, to be honest with you, and have enough in stock to be able to offer them at this special price while supplies last. And we're going to run with that this week, and I feel good about it very, very much. It's what I've been buying myself for the last 6 months, so happy to bring those to your listeners here today.
As always, Andy, we're so grateful for your presence here with our viewers. They look forward to these weekly market updates, and you bring a rare combination of macro picture and then inside the belly of the supply chain to help people get inside and outside view of things. Just grateful, as always, for your presence here with us on Liberty and Finance.
It's great to be here too, Dunning, and I'll leave your listeners with one last thought. Remember, silver broke through the 200-day moving average, and someone thought it was important enough to sell over 1 year's worth of global mine supply onto the market in paper to push it back below that moving average, that resistance level, that number that means something to the technical analysts. Here we are today, way back through it, and maybe, just maybe, one of these days, the price continues to run and won't be hammered back down like we all expect it to be. One of these days, we will find that they're letting it go because there just isn't enough silver for them to continue to play these games. So appreciate doing these weekly interviews with you, Dunnigan. I'll look forward to next Tuesday. And I just have a feeling that there are going to be more and more interesting things to talk about as time rolls on. So again, thanks for letting me be here. And I hope you and yours stay well for the next week until we chat again.
Thanks, Andy. We'll see you soon.
Take care.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.